Good afternoon. This is Brad Dennis with BIS Commodities with your weekly wrap-up for the first week of November. First off, let's take a look at corn market. First week new highs. Last week we had new highs for the move in corn. Got up to 381 in December corn. This week we started out the market or the week lower. We actually gapped lower and did not fill that gap over the week. You look at the fundamentals, we're still looking at a higher yield out there, or good yield. Export sales with the bean program that's going on right now, corn sales are well below normal for this time of year. So that's kind of added to a little bit of price movement to the downside. The other things that you have to look at is all right, so if we're going to work on the export market, we have to see us be competitive on a global basis. We are not competitive on a global basis. There's a lot of corn out there in the world, and there are prices that are much lower than ours. So from a price-wise, we're not competitive. So what would help our price? Well, maybe if we had a lower dollar. Well, that is not the case. Our dollar is screaming higher right now. So that's putting us even more and more out of the export market. Also, you got to look at RBOB versus ethanol. RBOB's trading under ethanol right now. How long is that going to last? So you've got some issues going on right now that these guys are trying to boost the price up, but it kind of seems like it's a tough issue right now. You know, there's always the black swan affairs that can cause something to happen, but I think you've gotten far enough through harvest. You know what your yields are, and the government will tell us that on Monday. You've got enough corn that's kind of trickling in here and there to fulfill domestic use. You've got too high of a dollar to be competitive on the world market. So as far as the export business is concerned, you really can't say that that's booming by any means. So I hate to paint a really bad picture here, but you have to take a step back and you have to look at what's happened with corn. And we know we've got a major report on Monday with corn, and each month we've been raising our ending stocks. Now, last month we were trading around 330 on the corn. Now we're trading at 370 approximately. So how can you raise demand in that sense that we've rallied so much in corn prices? We might be just digging ourselves a little bit or kind of getting into a little bit of a range trade of corn for the next few months with the amount of corn that's going to be coming out. So call it 380 to 320. Definitely could be the range over a multiple month period. Over in the beans, let's look at the beans. Beans were being bid up. Meal was going up to 400. There were logistical issues, so double bookings were coming in, and those margins were so good on meal that they kept buying the beans and everything. And then about halfway through this week, we saw Asian bird flu come back into the picture like it did last year, and we saw the Dalian's meal go limit down. Well, we traded under 10 bucks then, and that just shows you what amount of quick money is in this bean market right now. We took it from an opening on Monday of about 1047 or so, which also was a gap lower from last week, and took it down below $10 in a heartbeat. Now we're back up to 10. I think 38 is where we settled today. But it shows you how much quick money is in this bean market right now, and how these different outside events are really affecting the market. Now on Monday we're going to get our supply side. I know there's been a lot of talk about acres coming back down again. It seems to me that that's going to be tough to see. I don't expect that to happen. As far as yield is concerned, it's kind of anybody's guess, but reality of the situation is if we stay at a 450 bushel or 450 million bushel carryout for beans, that's like adding up the last 3 years together. So the people that are putting away beans thinking that there's going to be a rally in the springtime, as there has been quite a few times, but those have been 150, maybe 200 at tops carryouts. When you're talking 450 million, that's a lot of beans out there, and to expect a rally out of in the springtime, it's got to take some help from South America, and they have to have some kind of production problems down there. So even if you do want to hold on to it and you want to go out that far, think defensive. Have some kind of floor underneath it, because that type of carryout does equal some lower prices from where we are trading right now. Also, going back to that meal, we're hearing that freight cars are starting to come down a little bit, so we're starting to free up the railroad a little bit. So we knew that this meal thing was going to be a short-lived kind of issue, and we're starting to hear a few things loosening up that logistical issue that they have. So like I said, once again, if you want to store stuff, that's great. Just have a floor underneath it. Meal breaks down pretty heavily next week. You could see that bean price under $10 again. As far as the report is concerned, you're looking at the average guess is for beans to be at a 446 carryout. You're looking, which is about 4 million bushels below where we were last month. You're looking at corn being at right around 2.15 billion bushels. So, I mean, you're looking at some pretty good numbers out there. You're still increasing that corn number, which tells me that we had maybe our post-season rally already with that 55 cents that was put on the market because of bean meal. There's no reason to go out and bid higher for that many bushels out there. Got to remember, the world grows it. People will get it elsewhere. Domestic, once again, ethanol's higher than RBOB right now. Moving on into the cattle market, really odd that the cattle market has been range trading ever since we went to the limited hours in the livestock market, and that was October 27th. So we've seen a big sideways trade out there as of late. 168 was a little bit of cash that traded yesterday in Nebraska. That's stagnant with what we did last week. So how are we going to compete with Thanksgiving down the road? Seasonals will have us rally. Seems like you've got Dees cattle in a 162 and a half, 163 to 169 kind of range. Over in the hogs, likewise, you look at Feb hogs, you're 86 to 90 basically is that range, and I don't see anything propelling us out of that quite yet. I think you've lost some market makers or some traders because of the abbreviated hours now, and maybe it'll be a little bit more reflective of fundamentals out there. The last thing is the equities today. Today we had non-farm payrolls. They were looking for 240,000 on payrolls, came in at 214,000. Even though that's a disappointment in that it didn't hit that 240 level, you're still seeing job growth, and that's the main thing, and it's over 200,000. Unemployment rate came down from 5.9 to 5.8. That's manipulated enough that you make of it what you want. One thing that I did notice is that my hourly earnings were up. If you see inflation leak into this economy, it's going to be wage inflation led, meaning that we have to have some higher wages, more spending to get that inflation going. And that's what the Fed is definitely going to look at. Dollar's strong, a little bit of light profit taking at the end of the day here, but you've got the Bank of Japan flooding the market, buying up equities, funds, everything they can get their hands on to get the yen in there circulating. So the yen's going to continue to go down. You've got Europe still looking at hard times, and they're still looking at their own version of quantitative easing. So the dollar should stay strong against the European Central Bank or the euro. So you add those things up, and if we're really trading this thing on a global basis, you're still looking at a stronger dollar down the road. The big question on the equity side is, when will that stronger dollar cause exports to diminish some? We saw a trade report the other day, and we did see, our exports were down, but our imports were way up. We're utilizing the stronger dollar as buying power, and that's what we're seeing right now. So that's kind of in a nutshell what we saw this week. Once again, I'm Brad Dennis with BIS Commodities. If you want to check us out on the website, we're www.biscommodities.com, or give us a call here in the office, 1-800-373-2525, and we'll do our best to help you out. End of broadcast.